Hey everybody, it's Sunday Fun Day. Hope everybody's having a good weekend. Let's jump into this one. As usual, a lot of head scratcher type questions. We'll talk about kind of faster horses versus better, smarter investments, rethink wealth building, wealth retention, and making enough money to obey the FIRE rule of 4%. We'll also look at SoFi. We'll look at Microsoft. We'll discover if AI can kill cryptos and blockchains and create a new blockchain. We'll talk about disruption and how you can embrace the revolution that's coming with bots and robotaxis and stuff like that. We'll look at dividend stocks, Tesla leaps, covered calls. Yeah, quite a bit actually. So thank you all for coming. Let me make sure this is playing. I assume it is. Shout at me if it's not. And thank you to the mods in the chat. Let's go. This is called Faster Horses, and we'll also star a donkey too. They can be fast. That's a guy. And of course, none of this is financial advice. And all the questions come from the team on Patreon. Thank you, everybody, for making me think hard every weekend. First question is, win bear or bull one? Thank you, James and I team, for the rigorous and insightful content. Also, the tools you offer are amazing. Glad you enjoy the tools. For our staked assets, Sol, Jupe, Nos, what's the best indicator, or how do we know when to unstake so we can take profits? Brilliant question. In fact, the current summer we have had shows you the critical importance of taking profits. And yes, the summer has been doldrumy. A lot of chop solidation, a lot of crappy results. A lot of people are down a little bit, both psychologically and otherwise. But anyway, let's talk about this. I'm going to answer it in two ways. First of all, you've got to look at the crypto market and always keep an eye on what I call the mothership, which is Bitcoin. What Bitcoin does, the rest kind of follow. Now, there's a couple of things. When to unstake. First of all, I believe we need to watch the TABI model. It sounds like you already have it. When we get to orange or dark orange, we need to start preparing. Very, very important. But we're not looking, and you see here, this is the ATR model as well. As we break new levels, we'll see how hot we get and when we need to start layering out. I like to look at a bunch of indicators as well to find confluence across many different things. The other thing that we are prepared for, and believe me, 2021, we made a mistake. We did not realize the market was manipulated. My target was 89K for Bitcoin. I thought it was, a good 80% chance we'd hit it. And I was only starting profit taking at that time, exiting things like Matic and other stuff. But I didn't realize how manipulated it was. Now we have the tools, the discipline, and the science to make sure we do not get caught with our pants down again. Okay, so TABI model, ATR model, two things to keep an eye on. Of course, big trends, big spikes, mean reversion, etc. The other thing is the profit-taking model. This is our scientific exit model. And even, this shows you how we have a plan to take the majority of stuff off the table in conjunction with the top and bottom indicator and the ATR model, but do it scientifically with a process. That is going to be key. Because if you imagine an asset like Bitcoin, could it get to 120,000? 80% chance, yes. But what happens if it doesn't? What happens if you're sitting there at the bus stop waiting for the bus number 120 to come and it never comes? And that's it. And the most important thing too is the opportunity cost of taking profit all the way up is actually very small. You don't leave a lot on the table. And people forget that too. And all of this is in the profit-taking model. By the way, we were supposed to launch it last week. We got a problem with the back end on the website, putting this product up there. Hopefully the team will have it solved this week and people will be able to see it. Now, the other thing as well, keep a close eye. You did mention as well, win, bear, or bull. One, when to unstake. If some people commit, say something to, say, Nasana for 6 months, and it requires a 6-month unstaking period, get the hell out now, okay? Very important. Do not wait. We don't know what's going to happen. And I'd rather sacrifice some staking returns so I have the flexibility to sell stuff fast. I think it takes like 1 or 2 days for Solana to unstake. That's not a big deal. But just keep an eye on that factor as well. So thank you for the question. Next question is from Future Proof. And these are in no specific order, but this is so important as well because our kids are going into a world that is, I believe, I should be talking to the camera on this one, I believe is going to be a very scary one. Having kids understand finance and investing will be a core asset to their life and their success. Everything is tied to investing. Everything. How you invest your time, how you invest in your relationships, how you invest in markets, what you do with your cash, how you invest in education. All of these things tie back to that, and you want to maximize your ROI. So there's a great question from Future Proof. And he talks about his daughter is turning 17 on the 3rd of September in 2 days. By the way, it's September already. Thank God we're out of August. And actually, Bitcoin is going up a little bit. Woo-hoo. Let me see if we get a Sunday pump again. But back to Future Proof. She will gain full access to an ISA I've been investing in since she was born. Well, you are a super papa. Congratulations. She knows nothing about investing. How would you suggest giving her the basics? Not sure parental advice would be absorbed. Brilliant question. I'll give you a real life case of what I did. And again, much younger kids, not 17, but think 12, 13, 14, that type of 15-year-old age group. And just make up a tale, a situation. And this will really help them understand. So, true story, 2 kids, gave them 2 options. I said the tale of 2 choices. This is Robux versus Sol. And for those who do not know, that's a virtual world where kids, I take my dollars, run a credit card, buy them Robux that they spend in a virtual world. It's the biggest scam ever, but kids love it. Microsoft makes a ton of money from it, and I'm guilty of spending a lot on that. Anyhow, don't shoot the messenger. So imagine you tell the kid you've got a magical piggy bank, and you've got 2 exciting options. You can buy $80 worth of Robux. This was the exact amount. Or at the time, Solana was $20. And I explained they know that Robux is a currency for games, but for Sol is also a type of digital money, but kind of empowering the world. So you can buy 4 Sol for $80 or Robux. Now, one decided, I want the Robux. The other one said, no, I don't want Robux. I'm bored of the game. They got 4 Sol. The result is option 1. They don't even know how. The one kid doesn't even know how they spent the Robux in the first place. Can't remember how it was spent, what it was used for, and it's gone. Disappeared. Option 2, and this is the key thing, you give them constant updates to drive engagement and excitement, constant reminders of how the 4 Sol is now worth $560, and it was worth over 800 at one stage, but again, it's a volatile ride, and ask if they wanted to withdraw a true story $80 to get the Robux now and keep 480, and they said no. They're enjoying this ride and let it ride. So think about telling a simple story. 2 options, pick one, and then show them the results of each as they go forward. I found that very effective. One doesn't care, the other one is very excited, and at a very young age understood the power of investing in a short window of time. Now, next question is from, this is the first time Chris CDS has posted. Welcome. Hi, James. I've been a daily follower for over 2 years and recently joined Patreon. Thank you for your dedication. Learned a lot. Great. That's the whole mission and appreciate it. I'm thinking of buying at or in the money leaps on Tesla or MicroStrategy with 5% of my portfolio, 212 shares, 0.9 BTC, 300 Sol to amplify returns. Worthwhile strategy in the face of incoming global liquidity throughout the next 12 months, crypto not having peaked yet, and Tesla potentially popping in the next 12 to 24 months, or too risky since we have already at a later stage of the cycle and low diversification becomes an additional concern. Thanks for your insight. This is a great question, and it's one I think about all the time. I have heavy concentrated portfolio in very few assets that have all done very well, except Tesla. It's been good because we were able to stack at very low price, like 106 and 140 and 160 and stuff. So we're still making good money on that, but it hasn't quite gone, back to 400, which is where it is going. And there's a lot of stuff on the way. But let's look at your bags first of all. And again, keep your security locked down, keep your profile hidden, secret, etc. Never share your public name on the internet. So you have nearly 1 Bitcoin. Awesome. You got 212 shares and you have 300 Sol. What's interesting about this is your bags are almost identical, like a third, a third, a third, except your heaviest bag is Bitcoin, which is what it should be. Good job there. Now, what's interesting is when I calculate 5% of 140K, it's $7,000. A little bit over. But let's just say you got $7,000 to play with. What would I do? I won't tell you what to do because I do not give financial advice, but what would I do? And let's look at a couple of things. First of all, you have 212 Tesla shares. That's a nice bag. If this goes to where I think it would go, and you take the low estimate of 2,600 by the year 2032, it's going to be a very, very nice position. Also, we don't need to talk about Bitcoin because we know where that's going, somewhere between 800,000 and 1.2 million. And then you have here Solana, again, riskier asset, but you need to have a bag of approximately, with staking or without staking, at least somewhere between 300 and 1,000, depending on how you run. So the summary of all of this in very, very succinct way is as follows. Your Bitcoin bag is solid. Your Sol is a tad light, but that's okay. Your Tesla is good. But also, I do believe it's the one with the most upside for a leap. MicroStrategy and Bitcoin, most of the pump has happened. Is it going to 2x from here? Maybe. The question is, what can more than 2x from here over the next 2 years? The answer is Solana can, and the answer is Tesla will. And I say that with a lot of conviction because I study Tesla every single day since 2017, just like Bitcoin. So I feel I put a video together. I said pair trade of the decade. It was about 6 weeks ago at this stage, exactly on this Q&A video. And at the time, Tesla was about $170. Bitcoin was at 68, 69K. And I said, Tesla's going to far outperform Bitcoin over the next 10 years. And the groans from the world was like, what type of idiot is this? Well, I've been right so far, and it's only 5 or 6 weeks in. So the option you can get with your 7K, I would look at these. By the way, in full disclosure, I did buy a bunch of $200 2026 call options this week or last week. I can't remember. So I'm on the same train. But I do a different kind of strategy. As if you follow me in the community, you know exactly what I do and how I do it. But here, I would look at these two surrounded with this little red box. If you can get the 195s or the 200s, again, the stock price right now is about 215 in after hours. So you're a little bit in the money, 15 to 20 bucks, which is what you want to be always. The premium is high, but we are buying more than 2 years of time, everybody. It's like 25 months of time here, which is good. The result from this stock will be very, very intensive the next 2 years. Moto89, thank you so much for coming. That will cost you not 7,000, but maybe 8,000. And if there's a dip next week, jump in. I drove, just as a personal side note, I drove the 12.5.1.5 or 12.1.5, whatever it is. I can't even remember. Unbelievable. The precision. And I'll say it again, it drives better than me. Absolutely smooth, absolutely precise, absolutely flawless in a whole range of different situations. So we're nearly there. We're like 98% there to autonomy for cars, which is interesting. So think about that. I think that's the best risk reward. Thank you for the question. Valuable. If AI, this is a cool one I think about all the time too. If AI is able to create a new blockchain that is cheaper, faster, more finality, etc. than Solana, that's obviously going to be an existential threat to Solana's existence. How often do you think about this happening? Every day. And what do you place the odds of this happening in the next 5 years? Lastly, could the Solana Foundation be using AI now or in the future as a competitive advantage to ensure they remain top of the food chain and prevent an AI hostile takeout? Brilliant, brilliant, brilliant question. And everybody, the most important way to think, by the way, thank you, Bottle of Red. The most important way to think is always think about the future, okay? I made a detailed post in this yesterday or the day before, kind of inverse thinking. Don't think about the upside, think about what can actually derail you, what can destroy your bags. Critical. So, first of all, if it was true, I do believe it is true, AI could create a better chain, but we're not there yet. If it was easy for this to happen, Firedancer would have been built 3 years ago. Instead, it's taken them nearly 3 years to build and rewrite the entire platform in a different language called C++. And that will eliminate all potential bugs in the platform. And that will also help it scale to 1 million TPS. This is getting very close as well. Now, the other thing to consider too, even if somebody does use AI to build a new, better, cheaper, faster blockchain, if it's not adopted, it'll go nowhere. The other point I'd like to make too, and you've heard me say this all the time, I talk about tap dancing shoes. Nothing lasts forever. Everything will evolve and die. Everything. Bitcoin, Tesla, Solana. Think with that mindset. Nothing will last forever. There are very few companies that have the potential to last 100 years or 1,000 years. You got Ford Motor Company. It's lasted over 100 years. But if they continue on their current trajectory, they will be dead. I guarantee you. Actually, they probably already are dead because they're making all the strategic blunders. They're not pivoting at a rate that they should, and everybody else is too far ahead. So the key here is nothing lasts forever. Don't expect Solana to be the leading blockchain in 5 years. You know, Bitcoin may not even be around in 5 or 10 years itself. We don't know. So always assume that too. There's always a 1% chance things will go to zero, and plan around that. And also, the final piece, the Solana Foundation is looking at AI hard, and they're investing in it and positioning themselves around it as well. The other thing, a little example of the most important thing, you can have the best technology in the world. But if nobody adopts it, like, yeah, I could have put up a pair of the Apple goggles for $3,500 here too. This is a thing called Segway. In 2001, it was groundbreaking technology, but the price point was $5,000. Nobody could afford it. Nobody. So it went nowhere. Okay? Brilliant technology, no adoption. So adoption is key. Remember that. That's why I focus very much on daily active users by chain. Thanks for the question. Next, this is from Smokin' Joe. Hey, James, after having its total debt in 9 months and achieving 3 consecutive quarters of GAAP profitability as we approach rate cuts, is it time to turn bullish on SoFi? Thank you. So I did own SoFi back in the day, a couple of years back when there was talk of government doing student loan stuff. And there was a little pop where I think went from $8 or $9 to $20 and quick in and out. That was it for me. Since then, I haven't looked at it until your question. Let's dig in. Let's find out what we got. First of all, you are correct. SoFi have had 3 quarters in the green. Well done, SoFi. But what does alarm me by this chart is the revenue is stagnant. It's flat or down, which is not good. I don't like that. I want to be in growth. Remember, if there's no growth, you're dying. It's like treading water. If you're not making 14% per year, you're drowning because of the debasement. That's not good. Let's see what else is not good. They have more debt than cash. So somehow you said they have repaid their debt? I don't know. Yeah, I don't know what data you're looking at, but the data I'm looking at is SoFi has been issuing new debt. Over the past 3 years, it's issued $1.1 billion of new debt. But their debt is double their cash. That always makes me nervous. I don't like that either. Also, not only more debt than cash, but check this out. Free cash flow is a key thing to look at here. And they, last quarter, had nearly over $500 million of negative free cash flow. Kiss of death. One of the most important things in a company. Not necessarily profits or losses, because that's all about GAAP rules and everything else. Free cash flow. PEG ratio. Remember those two things. That's what you should be looking at. Their free cash flow is in the pooper. And there's more. 4 severe warnings. We have a couple of things here. The Petroisky score of 3 is low, which implies very poor business operations. They have a Benesh score of minus 1.64, which implies the company might have manipulated its financial results. Revenue per share declined for the last 5 years, and crappy quality of earnings, more likely to be made up of a lot of accruals. Crap. It's still a turd. But let's look at the chart. Maybe there's an option here. Is it a red flag? Well, it would be almost a zombie as far as I'm concerned. Way down off the highs in 2021. In fact, you'll see when probably I played it way back then. It went from $9 to $20. And then very clearly you see the top to get out. Since then, it's been acting like PayPal and the others. However, there is a little option here if you do want to trade it. Per the ATR model, it says very clearly, you buy it at $6, you sell it at $10. You buy it at $6, you sell it at $10. You buy it at $6, you sell it at $10. Range riders can be very powerful, and this is one right now. But long term, unless they fix things, it's a complete turd. Over $500 million a quarter in free cash flow losses, unacceptable. Double debt than cash, unacceptable. And of course, all the red flags. Nope, do not touch. And by the way, I don't want to sound like I'm very critical of stocks, but remember my mantra is be in the top 1% of assets. That's how you win. Don't just, people ask me 1,000 times a day, what do you think of this? What do you think of this? What do you think of this crypto? What do you think of this? Again, do your homework. See if they are in the elite, the creme de la creme de la creme, the top 1%. That's when we play. That's when we touch them. If not, walk away. Now, after that little piece of passion, Alter Crypto. Thank you for your NFA. Yes, non-financial advice. I'm close to reaching my target amount for retirement. Once I do, how would you suggest I transition my high-risk investments into something more secure that can give me a decent annual return over 10% more than inflation that I can live off? I plan to live off 4% of my total net worth, similar to the FIRE strategy. As you said, it's not what you earn, what's what you keep. This is such another important question. You've made it. You've got your bags. Now you de-risk. Okay? So it's kind of, I talked about this curve before. When you have not much to lose, you can take on more risk. As you start building a huge bag and you want to preserve that, you go less risk. And then when you have infinite money for many lifetimes, you can just go high risk again with the portion of your portfolio. I talk 80-20. 80 is your hodl safe bag, 20% is your speculation bag. That's the way it works, that curve. I need to create a chart for that if I haven't already, but that is key. So you are at the top piece, you're de-risking, very, very smart. So what I would do in that situation, I get out of the hyper dangerous disruption and I would play with something like Microsoft. It's safe, it's well managed, it's a leader in many, many spaces, it's a cash cow, generates tons of revenue, and you could just start de-risking in your heavier risk assets, whatever they may be, and buy a combination, maybe some Google, some Microsoft, some Metas, etc. And these are all companies that are, again, very well run. I do want to say one thing regarding Meta and Google. I do believe they could be disrupted because of AI. Okay, they rely on advertising. Now with AI, people don't need to go to Google to find stuff anymore. AI will tell them what to buy and what to get. So the advertising business itself over the next 3 years could be heavily disrupted. But anyway, Microsoft will be around. That's for sure. Now, this is Microsoft on the ATR. What I would do is watch this chart very carefully. You'll see the layers, the little purple lines. You see the red being the bull market on the left. And then you got these little flags. This is a daily chart. Very simple. 88% of the time, you can win just following this. When you get a red triangle up against a top resistance level, you sell a call out of the money when the trend turns down. If the trend goes up, you do not sell the call. So when you see it going on a rampage all the way up in blue, say early 2023 to July 2023, you wait until that trend turns. Then you sell that call and then you let it expire. Then you go on the next rampage. You wait, all blue all the way up. You hold, and then you wait, and then you sell a call at that next level, which is about 420, give or take, and then you let it expire. You sell the calls out 6 to 12 weeks, and then you wait. Then you go up again to the next level. That level is 470. You sell the call there. You could have got 30 to 40 bucks for that. It would have protected your downside. Wash, rinse, repeat. You can do this 4 to 6 times a year, like clockwork, with 2 or 3 assets like Microsoft, which will go up over time. It'll outperform the market, most probably. All right? And just sell calls, generate your cash. That's how I started in the 90s. So, and even with plays like Microsoft way back then. So that's just one idea. I could give you 100 others, but look for those. Also, you could play with range riders, find things like CleanSpark. We were trading between 15 and 20, for the last year or so. So we'll see. Lots of opportunity, but have a process, have a tool, have an asset you like, be on an underlying asset that's in the top 1%. I personally don't own Microsoft, but if I had to de-risk, I probably would. So hope that helps. Next question, EW. Hey, James, a friend of mine is adopting a wealth generation strategy involving dividend stocks. The least risky of these return about 4 to 6% annually. I'm going to stop you right there. If you are getting 4 to 6% annually and it's dividends, you're going to be hammered by taxes. And if you don't make 14%, you're drowning. I'll hit that again here. 4 to 6% will not get you where you want to be, everybody, okay? That's no good. Let's move on. He plays with some Realty Income. BlackRock's BDC, BIGZ is the ticker. There are riskier ones that yield 8 to 16%. We're getting closer to the 14% here. These include mortgage REITs, smaller cap BDCs, MLPs, and emerging market. By the way, some of these tickers here are emerging market ADRs. Do not touch an ADR. They're very dangerous. Very dangerous. Remember that. You're totally playing with fire when you use ADRs. And examples would be PHK, AGNC, QLD, Main. We'll look at all these charts as well. He needs 10% of his portfolio with very risky yield max funds. Yeah, which are yielding about 50% annually right now. All of his dividends reinvested. Thoughts on the strategy? Well, if you know this channel, you know my thoughts on dividend stocks. We'll look at some of these charts first. Walk through them real fast. ULTY is down 42% in 6 months. Nasty. Yeah, you might get a dividend, but you take it in the shorts. Then QILD down 31%. Boom. And the direction is down. You got AGNC down 44% in 2 years. It's been holding on since 2023. It's actually down since 2023, but still not as disastrous as the others, but still overall not too good. And Main is the only one that's up, but it's only up 10% over the last 5 years since January 1st, 2020. Not good enough. Not good enough. Why? Why? People get enticed to say, oh, this pays me 6% dividends and it sells tobacco. Whoa, great. I'm going to be rich. No, because you look at the underlying, it just goes down. Okay, you lose way more than the dividend 6% you make. Why is that? This is the reason. I call it the dividend death trap. Once a year, I get a question like this and I go into it. So first of all, dividend stocks underperform the broader market for several reasons. Limited growth potential. They allocate all of their profits or a significant portion of their profits to shareholders in the form of dividends, which leaves no capital available for reinvestment in growth opportunities because they don't know how to invest. They've got nothing to build. They can't compete. This limits the company's ability to expand, innovate, pursue new ventures, new growth, etc. And they got poor earnings growth. Capital doesn't go up, as you've seen from all the charts. Also, since dividend-paying companies distribute a portion of their earnings to shareholders, there's often no potential for stock appreciation. They all go down over time. And growth-oriented companies that reinvest their profits experience much more substantial increases in stock value over time. I always said this before too, by the way. The day Tesla starts paying dividends is the day I sell Tesla. Boom. You heard it here first, everybody. Actually, I probably said it before. But anyway, also they can be interest rate sensitive, huge tax implications. When you get dividends, they get hit by taxes, even if it's tax-free or you reinvest. Check that out. And also there's tons of fees and taxes. A lot of people in the food chain get fed before you do with your little dividend check. So again, you're better off buying a tax-free bond or something. Never touch dividend stocks. Never touch REITs. There's a whole ecosystem of people feeding off your money before you even get a little check. And you just look for yourself in all the charts. Remember, this is the death trap. 42% down in 6 months. Don't do it. So whoever your friend is, and maybe imagine they have $100 million portfolio. They're happy in their heads getting 6% on this. Okay, that's way enough to live on, and that's all they want. But it's a surefire way to lose, like buying life insurance or something. Anyway, hope that helps. And sorry, I feel like I'm answering questions in a disappointing manner, but these are things you need to know. Very important. Next is from Divergent Observer. Yes, an exciting question. Soon we will be able to rent robotaxis from a Tesla app for short trips, vacations, maybe even deliveries. I believe bots will follow, so we would rent bots for errands, random housework, or at least temp workers in a business. Hey bot, please renovate my kitchen. By the way, in full disclosure, I don't think, there's a couple of job industries that are very secure right now, and there are skilled craftsmen, things like plumbers, electricians, carpenters, tilers. I don't see bots doing that type of stuff, so don't worry about that. So they will not be able to renovate your kitchen. They might be able to guard your house or mow your lawn, but that's as far as it'll go for a long time. Now, how should we prepare for this opportunity? Just buy bots and taxis and put them on the network and get rich? And can it really be that easy? And can you recommend strategies to best handle the risk? Yes, I can. So, we don't know what's happening. I do know people for a fact right now, just off the record, they're stacking Teslas. They're buying secondhand ones, like Model 3s and stuff, Model Ys, with a tax credit, 20, 25K, good car, clean, hardware 4 vehicles, some hardware 3 vehicles, and they're keeping them to be able to use them as part of a robotaxi fleet. So that's what's happening, because when this thing does launch, that could really increase the secondhand value price of these cars that can drive themselves in a full autonomous way. And per Tasha Kearney, she sees we are right there. It's coming. We have October 10th, and these things may go live and start wandering around the streets in 2025. So it's not going to happen tomorrow, but in the next 12 months, it definitely will happen. Now, large companies, hey Doc intern, large companies like Tesla may prefer to own and operate their own fleets, but Elon has clearly said people will be able to do that themselves too. How it operates, how it works will depend on the actual market the person is in. There will be a potential as well for individuals, small businesses to own and operate a limited fleet of vehicles. I do recommend start with one and then see how it goes. See if you can make money from it. Like it's similar to how some people rent out their vehicles now on Turo. Another guy gets $700 a day for a Cybertruck on Turo, which basically a day and a half out, he covers all of his expenses for the car for the month. Now, there may be opportunities to do different things, but there's a couple of things that you need to be aware of. First of all, if it becomes that easy, these are some of the risks. If anybody can buy a car for, say, $30,000 and it'll make you $60,000 a year, everybody will buy all the cars instantly, okay? Because it'll be a no-brainer pretty much. And that is what could happen. So I think the ways to manage the risk and the way I would think about it is, when it comes to diversification, do not put all your eggs in the robotaxi basket or expect to get a bot. Bots will be bought first by big manufacturers. I can't see us, individual retail customers, being able to buy bots for our houses. Not for a couple of years at least. So I'd think more about the robotaxis first. And then try a couple of different things. And also run a pilot. As I mentioned, try one first. Make sure you can make it generate ROI. If This is super easy to do. And if you are the first person in your city or town or village to do it, and people see you're making money, everybody else will do it. And when that happens, it'll compete away all the profits, and it won't be that lucrative anymore too. It'll be maybe lucrative for Tesla, I don't know, but run a pilot first, make sure you can do it. Also, this whole thing is going to evolve very fast. As I mentioned, if it's a money spinner, everybody will do it. Profits will be reduced away, and have a plan, including contingency funds, and also an outlook to the future and what could derail your business, like recalls, software updates, regulatory fines, I don't know, people puking in your car, cleaning fees, who knows, competition, making it unbearable. There was a time where Uber drivers, there were so many of them on the roads that literally they all made no money. They all competed away the profits because there was such a glut of Uber drivers. The only way they actually made any way to make a living or buy a coffee was from the tips, which goes straight to their pockets. So remember that little example there. We don't know what type of world we're going into. I think there will be opportunity for abundance, but the people with the big money and the big power will grab it first. If you do have the opportunity to get a Tesla Model 3, or you have one and you're thinking about trading it in, try hold on to it for the next year or so and see what happens. It could be worth having a couple of them. But remember, you have to think about it from a very local perspective. How many other people have these cars and how much competition is there from other places too? But it's going to be fun to watch. The next 2 years will be absolutely face melting from technological disruption. Absolutely face melting. So we ain't seen nothing yet. Also, next question, JS Castle. First time you posted. Thanks for coming to the community. Love your work. I've been actively trying to grow my bag of Solana. I've been staking for a long time, which is pretty slow and steady way to grow it. I was wondering about trying out JLP. Is this a faster horse to grow returns from Solana? Let's dig into it. And I jumped on the JLP bandwagon in the early days when they were paying 112%. I think it was even up as high as 121% at one stage. So that was like crazy. That's a great place to park cash. Now the return is 27.46% per year. Okay. Now JLP has gone up since January 1st, 82.53%. When you annualize that, that's north of 112%. So it's been really good. However, just like I mentioned in the previous example, when something is too good, the profits get competed away. Everybody jumps in and gets in there. And that's probably what happened here too. So the APY is now down 76%. And the SOL return is only 22.39% since January 1st. Of course, 2023 was a rampager for Solana. But JLP has far outperformed. So if we could turn back the clock and time it carefully, it would have been a good idea to ride Solana up until, I think it was March or April, turn into JLP, and now go back to Solana. Actually, go back to Solana when it was like 111 the other day. That would have been a good time to buy. Solana right now, as we talk, is at, I know it's been a crappy week for crypto. It's $135. So it's still up off the 111 a few weeks ago, but still, all crypto is getting hammered right now, including Bitcoin. So the question is, what would you do now? Now, from my perspective, faster horse, I think if Solana goes back to $200, the return is 53%, and that could happen before the end of the year. The APR and JLP, APR, not APY, APR is now 24.46. So I think the best way to amplify returns is perps and sol. That's what I do too, but perps are very dangerous if you don't know what you're doing. Thank you, Bert Frank, for coming. That's, I think you're better off pivoting away from the JLP right now into other assets. And there's a couple of sol alts I think are very juicy right now. And speaking of faster horses, shout out to the team. This is Zulu, abandoned with her daughter. Zulu is blind, but enjoys the company of visually impaired horses within the sanctuary. So it's cute the way people do that. And thank you as well, Habitat for Horses, for all the great work you do. Tomorrow is DCA Live, usual time. It's normally like 7:30, 7:40 a.m. We talk for about 5 or 10 minutes before we go live. So 7:40 a.m. is when we go. And it'll be a fun show. Thank you all for coming. I'm going to do some live questions right now. Let's jump into this. I hope you enjoyed the Faster Horses show. Thought that was a good name. Inspired by Zulu and the team and the assets we like to be in too. Let me try pop things open. Thank you as well to everybody that is here and contributing so we can all make a little bit of a difference in the world. Texas T-Rex, within my 10% higher risk portfolio plays Injective, Sui, and Aptos, which would potentially be the fastest and why? I don't think much of layer 2s. Injective, I own. I don't own Sui. It's hard to say. Sui is coming up. I just don't like, the tokenomics of new projects. Injective tokenomics is better. I'd probably just stick with what I'm doing right now, is holding Injective, even though that has been beaten down too, like everything else. That would be my plan. But make sure you have some Sol too, because it is the token of this bull market. Charles Kincannon, do you think CleanSpark will rebound with Bitcoin up? So Charles, as you know, I do analyze the miners. I'll repeat this again for the 100th time. Never have more than a 5% allocation to Bitcoin miners. They're very risky, very cutthroat. They all issue shares and dilute you like there's no tomorrow. And it's hard to make it there. Now, buying miners in the bear, when they're like $2, yeah, no brainer. Buying now, very risky, very risky. I do believe the way the Bitcoin miners work, when Bitcoin goes on a rampage, the miners rampage even more. That's what we got to wait for. And we're in this never, never land. The miners have completely broken down below support levels, many of them. And as I say, it's a cutthroat business. Buy them in the bear, watch them in the bull. Be careful of them in the bull. I do think we'll get back. I'm currently hedged at $20 on my CleanSpark. It wasn't hedge enough though, because we've fallen. I thought we'd get back to 15 or down around 11 now. But again, my cost basis is actually positive. My cost basis is negative because I sold calls against my position, reducing the cost to zero. Actually, a credit. So that's the way you play. Infinite money machine. But again, we need Bitcoin to rampage to new all-time highs before the miners rebound. Happy Feet up there in Canada. Could you do a how to stake your Sol best of 5? Still here, always watching. Awesome. I've done how to stake Sol videos and I've done Sol staking return videos. I try and right now I do have Solana staked with a place like Helios and others, but I spread it around. I don't have all my eggs in one basket. And the validators change all the time, which one's the best. So I will do something for Patreon internally because I don't want to, there's always a risk. It's never happened, but there's a risk a validator could blow up. I don't want to be saying, I went here and it blew up. That's why I spread it around, never more than 10% with any validator. So I hope that helps. Happy Feet. Thank you so much. Dominic L. Thoughts on Render moving forward? Is the tech worth it? I think Render is still good. I still hold it. I still hold it in the original version too. It's sitting there in an account. I never bothered risking transferring it to the new version because I'm afraid things can really get screwed up along the way. I still own Render. I think, yes, it's a very cool prospect. And they also have a partnership for compute with Nasana, which I also own. And they seem to be the best, risk reward. Also very good volumes, very good adoption. So again, risky stuff. Tiny, 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 tiny piece of the portfolio. But yeah. And remember, I am like 95% in 4 things. All my other stuff is tiny, tiny percentages or fractions of percentages. So remember that, everybody. And thank you for your super sticker, Andy, Ragnar, Anglo Blackson, Dude Travels, Shane G, Investing KO, Moto89, A Bottle of Red, and Doc Intern. Thank you all for coming. Hope you enjoyed the show. For those in the United States, enjoy the long weekend. I think it's Labor Day tomorrow, which means we have to work. Labor Day. Never understood that, by the way. I work every day, so that's just me. Labor Day. I don't know if it's gratitude towards the workers or don't work on Labor Day, or I don't even know. I gotta figure that out. Thank you all. Thank you, Team Tesla, KH, Sean Donnelly, all for being here. See you all later. Bye-bye.